Good morning. I'm here today with Colin Donohoe from Lockton Insurance, who is one of our service members from the Engineering Manufacturing Network, and he's going to talk about insurance. So last year we ran a similar sort of session, which was quite beneficial to a lot of the members because the insurance market was softening apparently, and so I thought it would be good in April 2026 to do a second one, just to be able to provide new upsides, advice and insight into what the market's doing now. So Colin, last year you said the insurance market was softening. So what does that actually mean, and is it still the case?
How are you doing, Ailsa? Yeah, thanks very much for having me back on. So in 2025, we had a meeting with yourselves and some of the members to let them know that the insurance market was softening. So I think, as we described it last year, the market goes through hard cycles and soft cycles. And soft cycles is when insurance premiums reduce. Basically, what happens is insurers have more capacity to write business. They also have been making some money over the previous years, so they want to take on more bits of business. They want to try different classes of business, and with that, you'll see prices starting to tumble. That's what happened last year. We were of the opinion that it might possibly not continue to soften in 2026. However, that has been the case. 2026 has come. The soft market is still here. It's even here, probably more than what it was last year, which was incredible. So that's currently where we are. We're definitely in a soft market. What that means, I suppose, for 2027 going forward is that, if we listen to what the people in the know are telling us, is that the market will certainly. It'll continue to soften for 2026, but once we get into 2027, we think we're at a point where insurers probably won't be able to go much lower than where they currently are at this stage, and the market will certainly stabilize, and even to a certain extent might even become more of a hard market as we go back into 2027 and then definitely into 2028. So we're still at a point now in 2026 where the market is soft, where the premiums are low, and certainly much lower than what they have been over the past couple of years, for sure.
Which is great news for manufacturers and engineers.
Yeah, absolutely. We're in a situation where most businesses are finding everything increasing in price. Insurance premiums at this moment in time should be decreasing. There are caveats to that. Obviously, if people are having very poor claims experience, then there may be a situation where they won't be looking for large decreases. But the majority of our clients and new business development clients that we've been working with, we've been able to make sure that there have been significant savings in the previous years.
Okay, so can you give me an example of significant savings? What does that sort of look like? Maybe a case study?
Yeah, sure, absolutely. And I suppose one of the case studies that we won't go too deep into names, but one is one that we worked with you over about 12 months ago, which was an engineering company and a member of the EMN, and we were able to save that particular company in the region of 32% on their insurance premiums on the previous year.
Substantial.
Yeah, no, absolutely. We are talking about risk, companies here that are saving anything up to, and we have seen anything up to 40% on their insurance premiums. Now, again, I'll caveat that, as I said before, with regards to every case is different. And you will be seeing some companies that may only get 10, 15, 20%. But there should be discounting across the board now at this stage with regards to all insurance, and certainly on the engineer manufacturing side. I mean, I just wrote down a couple of clients that we've helped recently. A manufacturing company, 30% discount; a retail company, 27.5%; an energy company, 35%;
wow.
A facility, 40% discount, and as it is. So I think that the idea out there whereby an insurance broker talks to the client and suggests that level terms is a good result for them this year is not where they should be. Certainly manufacturing and engineering companies should be looking at getting double-digit decreases for sure.
Brilliant. So, what are the key questions then that that an engineer manufacturing company should be asking its broker when they're coming up for renewal?
Absolutely. Well, I think first and foremost, an insurance broker should be in touch with their clients and with the businesses straight off. That's something that Lockton have done straight away. We acknowledge that this is a case. This is a time whereby we believe that all businesses should be looking at their insurances for sure. So we've talked to our clients with regards to what's happening in the current marketplace and what they can expect going forward. We would have thought that most insurance brokers should be doing that with their clients. If they haven't, what I would be suggesting is the client to reach out to their insurance broker and be asking for a meeting. Certainly, what we do is we have pre-renewal meetings 3 months before. So it's well out there that the client will know what is happening and what is coming. Again, so from the new business point of view, we've been approached by many companies who've asked us to have a look at their insurance policies and insurance programs, and we're in a situation where we'll be able to tell them if they currently have a good program, what they should be looking to get as a decrease from their insurance broker going forward.
That's good news. So, companies are quite reticent sometimes, though, about changing their broker or changing their insurer, their insurance brokers. So this is definitely the time to potentially look to do that if you're not getting the right deal, I'm guessing.
Absolutely, yeah. There's no doubt. I understand that totally. I mean, we always make the same analogy about not many people change their bank every year, do they? Or every 3 years as it is. But insurance seems to be different in that way. But we'd always encourage people to test the market once every 3 years for sure. And what we mean by that is that you may have an insurer that you deal with, and they may be very comfortable with the risk that you currently have. But in the last couple of years, 2, 3, 4, 5 different other insurers who might not have been in the manufacturing or engineering sector that they wanted to write now do want to write it. So you should be talking to your insurance broker certainly every 2 to 3 years with regards to, look, we want to go out to market. We want to check and see that we have a program that's fit for purpose at this moment in time, but also is at a point whereby we're happy with the price that's out there. So I agree with what you say, that there's always this thing with regards to continuity of insurer. It's really, really important. I think there's a difference here between insurance broker and insurer. So an insurance broker, obviously, we're the man in the middle. We're the one who finds you the best insurance program in place. It's never good to chop and change your insurer over the years. It's absolutely fine if you were doing this every 3 years and things like that, but it doesn't look good if you change your insurer every year. It doesn't look good to insurers if you change your insurer every year, because they don't see the continuity there and they don't see that you're willing to work with a particular insurer over a period of time. So what we would always say is that there are no issues with regards to changing your insurance broker. Your insurance broker, obviously, first and foremost, you want to build up a rapport with, and you want them to understand your business. So on that basis, they will then be able to go to the right insurers and say, right, this is who we've got. This is an engineering company that's been working for 20 years. This is their turnover. This is their wage roll. We believe they're paying too much. This is where we think they should be pitched at. With regards to changing your insurer, yes, don't do it too often. But what I would say from an insurer's point of view as well is, if an insurer actually has a price, they don't want to lose that business. And let's just say, for example, if that price was at £100,000 for your program, that doesn't mean that they will not reduce that should you go to market and possibly find another insurer that's willing to reduce it down at a lower rate. So we've seen that quite a lot, whereby you stay with the same insurer, but at a much lower price, because there are just, as I say, there's more insurers out there that are now willing to write their business.
Okay. And we've had a couple of businesses within the network that have multi-year agreements, and they're right in the middle of it, and the market has softened. What can they do? Is there anything they can do to maximise the impact of the softened market?
Absolutely, yeah. So that's what termed a long-term agreement. So sometimes insurers will offer 2 years or 3 year long-term agreements to incentivize clients to sign up for 2 or 3 years with themselves. And what that entails is that generally, if we go back 2 years ago, we certainly weren't in the soft market at that stage. So they wouldn't have been building in discounting for year 2 or year 3. But we're at a point now where the discounting is so vast that what companies or insurance companies are doing now, and what we certainly at Lockton have been asking insurance companies to do, is to cut and rewrite, is what it's called, which basically means we will go back to the insurer, even though it is under a long-term agreement, and say, right, set this policy up a year ago, we're into year 2 of the long-term agreement now, but the market has changed, it's softened, we need you to look at it again. And I would say 99% of the time, insurers will look at it again and they will rewrite it. So they will sort of come back and they'll say, right, again, using that analogy of £100,000, it was £100,000 last year, but we're going to cut that, we're going to rewrite it again, and we're going to start at 90. We're going to start at 85,000. And they will try and incentivize it by offering another 2-year LTA, but this time possibly with a reduction on year 2. So it is definitely something that all businesses can still ask. I know they sort of, we're stuck in an LTA. That's not the case at this stage. Most insurers will cut and rewrite it as a new piece of business.
That's great. That's good news, because I suspect that a lot of businesses don't know that. Okay, I'm just going to move on and to, obviously globally at the moment we've got some fairly turbulent times going on. Will the insurance market be affected by that? Can you see any changes happening as a result?
There may be certain aspects of it that will be affected by it, but our day-to-day running of your insurance program, which would be a fleet, employer's liability, public liability, property policy, isn't really going to be affected from what we're seeing currently at this moment in time. It's not going to necessarily affect the day-to-day dealings of an engineering and manufacturing insurance program. It will deal with, unfortunately, it will deal with an awful lot of other issues down the line. But on an insurance side of things, we're not envisaging to see any increase due to the instabilities that are currently taking place.
Again, more good news. So I think that's it. Thank you, Colin, very much. That's been pretty insightful and I think quite helpful to a number of EMM members. If you'd like further information, then Colin's details will be coming up on the screen below and you can contact him directly. Or of course you can contact any of the team at the Engineering Manufacturing Network. And we'll hopefully do one of these again in 2027 around the same time, if not before, and keep you up to date with the insurance market as it progresses. Thank you.
Thanks, Ailsa.